So market made a high of 23340 and low of 23047, went very close to 23,000. We have made a profit of 0.4%, and half the January is over and we have accrued around 1.15%, so that's good going for us. So let's see what happened in the last. Once again there was you should just see the thumbnails on the YouTube these days. It is all painted red. I don't know whether we are actually living in India or some communist country like Russia and China, where is so much of red is seen on the YouTube thumbnails. Can be classified into two. One is where they teach the traders that what mistakes, either the traders share their own experience, what mistakes they have committed, or either they are telling somebody else's experience. That is in fact okay. The sky is falling and people trying to make make you more afraid, more fearful that the correction has yet not started. I'll tell you, with the simplest of the simplest strategy, like strangle selling, a short strangle, we have made money every week. Next day, now Monday, 13th of January, there was a gap down movement of around 236 points. 20. Uh, the MTM loss that was showing on that day was minus 0.2%. So this kind of MTM loss is not scary, and you are. Good morning, ladies and gentlemen. Today is 17th of January 2025, Friday. We have just finished the weekly expiry of 16th January yesterday. And this week, yet again, we have made a profit of 0.4%. And half the January is over and we have accrued around 1.15%. So that's good going for us. So let's see what happened in the last week. So last Thursday, we saw the market taking support at 23,500, and it just closed just above that. So I've seen a lot of people talking about that particular level of 23,500, and how it is a very strong support, and there is a lot of supply and demand zones were marked on the graph to show that market is going to bounce from that particular level. But on Friday we saw yet again that market just went through that level like a hot knife goes through butter. Okay, so on Friday the market made a low of 23,350. Yes, 23,350, and now people started talking about the level of 23,300. 23,500 was very quickly forgotten. That's really surprising. And over the weekend I saw numerous videos predicting a free fall for the market and all such negative news. And Monday there was some data in the US. You must have all heard about it, and I think jobs data was good. So interest rates are not going to get down. So I don't know whether for that reason or people are looking just for the reason. So market gap down drastically and went very close to 23,300. So that was a very scary situation for all the traders who were actually banking on certain levels, or who were playing too close to the market, trying to predict the market and such things. So once again there was you should just see the thumbnails on the YouTube these days. It is all painted red. I don't know whether we are actually living in India or some communist country like Russia and China, where is so much of red is seen on the YouTube thumbnails, just on the lighter side. But there's so much of negativity in the market in the recent times. There's so much of negativity that either people are scared or they are trying to scare other people. It is just ridiculous, right? So certain these kind of videos are actually can be classified into two. One is where they teach the traders that what mistakes, either the traders share their own experience, what mistakes they have committed, or either they are telling somebody else's experience. That is in fact okay. They tell you that okay, don't trade by taking debt from your other people and such things. Those are really good. But on the other hand, we see just the sky is falling and people trying to make you more afraid, more fearful that the correction has yet not started. It is already 12% or something. 3,000 point market up on correction has yet not started. What was going on the trailer? Okay, fine, there's going to be a COVID type of correction, so what, we should all go and buy puts? Is that what you want? The FIIs are selling like crazy. I have heard this so many times in the past years. FIIs are selling like crazy. FIIs keep selling like crazy. Okay, that's all right if this thing are known, and then the budget is coming, so maybe the market will revive or market will further go down. No, those are the things, those are the broad classification. But my experience is that the kind of videos wherein they focus on the traders' follies, individual strategy mistakes, and they can be corrected, those are beneficial. Other than that, there is a fear mongering, and people just want to play their views on the fear mongering, increasing the fear in a different way. What harm does it do? Well, that's what the premiums are for, isn't it? Somebody in my Telegram channel has quoted, that market may go down and all such things. Yes, market can go down, and that is why somebody is paying you the premium. That is where you are earning from as option sellers, right? So these All these movements is why people are buying the puts or calls, and that is how you are getting paid. So if you are afraid, you should also, rather than selling put, you should also buy puts, correct? So it's okay. That is why there are premiums, and that is why there are good premiums and bad premiums, and that is your source of earning. Anyway, so now coming to the fact that you should focus on the videos which are focusing on improving your strategy. Well, in the last 3 months, since October or September end, we have seen market moving 3,000 point down, but in fact it came 3,000 point, went up 1,500 point, and again now falling by another 600 a point or so. So actually, if you see the movement of Nifty in last three and a half months is actually around 6,000 points. Okay, so and I'll tell you, with the simplest of the simplest strategy, like strangle, selling a short strangle, we have made money every week, and it is what market has rewarded. Market has given you that much. Nothing great. I have not made a huge amount of money, but chota profit, and it is building up very nicely. So those who have just stepped into this video or just stumbled upon this video, we have previous 4 to 5 videos wherein we explain the strategy, the logic behind it, and each week we have gone through a step by step or adjustment. We have made very simple adjustments, nothing major. And even if you are working, even if you are not present in front of the screen, you can make those adjustments. Just be far and wide and choose your daily adjustment points. You can do them on your own based on your own experience. And uh, another thing is that is our Telegram channel. The link is in the description. Here I give my daily adjustments real time. Whenever the market hits a particular level or a particular trigger point, I just update it there. You have an option to subscribe to that. It may be beneficial to you. So now coming to this week's day wise trading, let's see. So on Friday, 10th January, Friday we take the positions at 9:25. 1500 points down and 1200 points up. So market was at 23,538. So we took the strangle at 24,600Z and 22,200P. And then each day we have our daily adjustment points, which is around 300 point on the downside and 225 points on the upside. Now these calculations are for the rough basis. Exact calculations and exact level may have a minor variation, which I share on my Telegram channel. So market made a high of 23,596 that day and low of 233,244. So in effect, it didn't touch any of the adjustment trigger points on that day despite a downward movement, and so we carried forward this position onto the next day. Now Monday, 13th of January, there was a gap down movement of around 236 points for whatever reason. In that case, what we did, we just closed the previous day's strangle and shifted our strangle downward with the gaps which we maintain on the Monday. Monday we have a gap of 1200 on the downside and 900 on the upside. As the expiry comes closer, we keep closing in the gaps as well. So market was at 23,235 at around 925. So we took a strangle at 24,200 CE and 21,950 PE, and adjustment points were at 23,500 and 22,870. uh, the MTM loss that was showing on that day was minus 0.2%. So this kind of MTM loss is not scary, and you are far away from your strike points, so it doesn't really affect you. So that is how it goes ahead with your psychology, plays positively. So market made a high of 23340 and low of 23,047, went very close to 23,000, but it didn't touch our adjustment points, as you can see. So we carried forward the positions onto the next day, Tuesday, 14th January. So Tuesday, market was relatively flat. Okay, so on Tuesday, what we do, we reduce the gap further. We reduce it to 900 on the downside and 675 onto the upside. Market was at 23,218 at 925. So as per our calculations, we are getting a strangle at 23,950 CE and 22,250 PE. The adjustment points are 23,500 on the higher side and 22,850 on the lower side. The market moved in a very narrow range with a positive bias on this day. The MTM loss of the previous day, which was showing as minus 0.2%, for it got reduced to minus 0.04%, and then turned positive towards the day's end and turned to plus 0.2%. Coming on to Wednesday, 15th January. 15th January, on Wednesdays, we do not close the positions further, just in case, because Thursday we have to maintain that gap of the safe range. So we do not close it, and until unless there is some sufficient movement or shift in the market, we keep the strangle as it is, which has happened in this week. The market was generally loitering around in the same way, so we maintained the same strangle and we maintained the same trigger points. Market made a high of 23,293 on that day and low of 23,146. It didn't touch any of the adjustment trigger points, and only the time decay took place very peacefully. The MTM increased to profit increased to 0.3%. So finally coming on to the expiry day, Thursday. Now here on Wednesday we had a what is one of the indication of the likely this thing is ATM straddle combined premium, and ATM straddle combined premium was around 109 or something, so which was on the lower side, so which indicated that there is going to be a calm recovery. However, on Thursday the market gapped up around 200 points, and that is the exact reason why we do not close our range on Wednesdays. However, the ATM straddle premiums continued to fall after that. So after that initial movement, not much of a movement in the market, we have a strangle at around 550 points on the downside and 400 points on the upside on Thursday. So we closed the strangle which we are continuing, and deployed this new strangle. Market was at 23333 at 925, and we had deployed our strangle at 23,800 and 22,750 p. And on Thursdays we have this midpoint of the range as our trigger points. So market was absolutely calm, and we had a very peaceful expiry. Overall, in this week, the market gave us 0.4% profit, despite the gap downs and gap ups and whatever. So okay, now we have seen what has happened day wise in the Nifty this week. Now technically it is important to understand that what is exactly happening with this strategy, right? So one thing is, in this particular strategy we are trying to have a wider range, correct? Now once we are having it in the wider range, what exactly is happening? It is having, if you pay attention to this T plus 0 line, this line becomes flatter, right? So that means if the market moves towards either side, the loss is not going to be much. That is one. If you do a straddle instead of that, you will see this flatter area is almost zero. You immediately start dipping towards the either side. Or if you have a strangle with less range, again it will protect you for a very limited market movement, and then that dip starts. So having that wide range is which gives us that delta neutrality, or that flatter area of the dotted line or T plus 0 line, which is important in case of the market movement, because bata ke to aayega nahi. Market will move, it will not going to announce that I'm going to move tomorrow, except in certain cases. Anyway, second thing is that why we have daily trigger points. Now you must have heard of this phrase, keep your losses small, or the analogy of we go up by steps and we come down by elevator and stuff like that. So yes, if you can, in option selling, if you can make your losses small, that is one of a very important component of your strategy, right? And how can you achieve that is by keeping your losses small. So instead of me booking a loss, say when it is very close to the strike, when the line has already dipped so much and we are sitting off a major MTM loss, I would rather like to make my losses small. I'll adjust at this point, which may be different from everybody, but in my case, the T plus 0 line, when it starts losing its flatness and it starts becoming more downward, that is the point I like to shift and make it flat again. Okay, that is why this thing is working. And third thing, which is very important, is why weekly time frame? Why not monthly? Why not 3 monthly? Why not yearly? Well, again, see, there are two forces acting on it. One, due to the market movement, the dotted line, or the market moves, the dotted line dips, and this is trying to pull down your money. This is trying to pull down your profit, or making the losses huger, so, or larger. Now if we see what is the opposite force acting on it, the opposite force is which is trying to pull this line up onto this payoff chart. It's trying to pull it upward, and this is what is giving you the profits, right? What is this line? What is this attraction force on the top? This is nothing but your time decay, or theta decay, and which is will give you the faster theta decay. It is your weekly, that is the least period of time expiry available to you. So if it is weekly, and this, even if there is a small drop, and next time market takes the pause, the line shifts up immediately, right? So that is the thing, that is the idea behind it, how T plus 0 line functions and all that. Another reason which can pull down the T plus 0 line is the increase in volatility or India VIX. Those things are there, but we'll not discuss it today. Anyway, to wrap up the entire thing, focus on the videos which tells you more about improving your strategy and less on trying to predict the market. Yes, it is a good thing to be aware of the things happening around, but we are normal traders, we are common traders, we don't have that plethora of knowledge. So focus on your strategy, make your strategy as robust as possible. And if you like the video, please like, subscribe, and share to anybody who you are aware is doing strangles and may not be having a good time. And lastly, subscribe to our Telegram channel. The link is in the description if you like the video. Thank you. Thanks a lot.